Okay. Today we see exercise number 28. You see the problem. Messrs. Prem and Sons keeps their books under single entry system, and they furnish the following particulars of their assets and liabilities. Okay. Asset and liability balances are here. 1/1/1996 means opening balance. 31st 12/96 closing balance. Okay. Land and land and building you take today, opening statement of fair and next balance sheet. Here is the change. Land and building opening is 10,000, closing is 12,000. There is an increase of rupees 2,000. Okay. This increase is to be considered as purchase, or you may consider as appreciation. There are two options. Okay. If the increase is a small and negligible amount, then you consider that appreciation. If you consider that as an appreciation, that comes to P&L account. This 2,000, 10,000 and 12,000, 2,000 increase. Okay. 10,000, 2,000 increase. 2,000 increase in the land and building is to be treated in two ways. If it can be treated as appreciation of land and building. If you treat as appreciation, you take in the P&L account credit side, and then you take to the balance sheet, add in the opening balance as appreciation. This is the one option. And second option is you may treat as a purchase of land and building. Increase may be due to appreciation or addition made during the year. Okay. So I consider this amount as appreciation made during the year. Sorry, purchase of asset. Purchase of asset, addition made during the year. Okay, so if you consider this as a appreciation, then the 2,000 must come to cash book and then goes to balance sheet. Remember this point. You have to make adjustment in the cash book. In the cash book payment side as purchase of land and building. Then you take to the balance sheet 2,000. Remember this. Both the options I told you people, and according to your interest you can make them. Then debtors goes to opening statement of face and closing balance sheet, and then you have to take in the debtors account opening and closing balance. Then stock goes to trading account, and then opening statement of a closing balance sheet. 4 times you record it. Creditors also you have to record 4 times. First in the opening statement of fair and closing in the closing balance sheet, opening in the opening creditor account, opening balance, creditor account, closing balance. 4 times you have to record it. Then outstanding salary opening comes to the opening statement of face, closing comes to the closing balance sheet. Opening comes to opening statement of fair, then closing comes to closing balance sheet. Okay, this is the first part. And one more thing you have to remember, this is to be adjusted in P&L account in the salary. You have to adjust the amount in the salary. Opening means it is the last year. Okay. Outstanding, last year outstanding is to be deducted and current year outstanding is to be added. Okay. Therefore, you deduct 2,200 as previous year outstanding, and 2,600 you add in the salary as current year outstanding. Okay, remember this. This is to be taken in the 4 time. One is opening statement of fair, second is closing balance sheet, then in the P&L account add the current year outstanding, deduct the previous year outstanding. This is the point you remember. These are the adjustments you have to make in the account. Then come to bills payable. Bills payable also you have to record 4 times. You record 4 times. first in the opening statement of year and closing in the closing balance sheet, then in the bills payable account to opening balance, closing balance. Okay. Then cash opening statement of phase, and next is cash book. In the cash book, debit side, to balance brought down. Okay. In this way, you record it. Then closing balance is not given here. Okay. You have to take care of this closing balance. Okay. This is the account balance. Then come to the following information. Further information is made available. Bills payable issued during the year. Bills payable issued during the year comes in the creditors account debit side first. Creditor account debit side first as bills payable. Then in the bills payable by creditor, record twice. Then cash sales during the year. Cash sales during the year first take in the cash book. In the cash book, debit side to cash sale and trading account by sales. Next, payment made to creditors. Payment made to creditors goes to cash book payment side and then goes to creditors account debit side. Salary paid. Salary paid goes to P&L account. P&L account debit side and have to make adjustment. Then drawing goes to cash book. Drawing goes to cash book and then goes to balance sheet asset side. Sorry, balance sheet. You have to adjust in the capital. Okay, salary, P&L account, then cash flow, payment side. Then you see the adjustment. The firm policy is to sell the goods at cost plus 25%. Cost plus 25%. Therefore, selling policy is cost plus 25% is the gross profit. Okay. Firm sells profit and bad debt during the year is 800. Bad debt during the year is 800. You see these 2 points carefully. Here they are given the firm's policy to sell the goods at cost plus 25% means this is the gross profit. 25% is the gross profit. Okay. Gross profit is given in the problem. So this problem is more complicated because gross profit is given means some item in the P&L trading account, some item you collect from the P&L account. One missing information will be available in the P&L account. Sorry, trading account. Therefore, you have to be careful about this. Okay. We will enter the transactions. What happens, we will see in the solution. Bad debt you record on the debtors account credit side by bad debt and take to the P&L account debit side 800 rupees. And depreciate land and building 10% on the opening balance only. They are told to depreciate only on the opening balance, not on the addition. Therefore, opening balance of land and building is 10,000. Okay, on this 10,000 you charge 10%, that is 1,000 depreciation. Comes in the P&L account debit side, balance sheet, asset side. Okay, this is the problem. Now we prepare the accounts. Okay. This is the opening statement of affairs. Date is (1196). 1196 date. You record according to the given information. Opening balance is problem number 28. Okay, 28. First item is land and building. First is land and building. Opening balance 10,000. Land and building. Second, debtors 35,000. Sundry debtor 35,000. Then stock is there. Stock is 28,000. Then Creditor come to the liability side. Creditor amount is 21,000. Then outstanding salary. Outstanding salary I recorded as expense due. Outstanding salary 2,200. Then bills payable. Bills payable 8,600. Okay. Then cash. Cash comes in the asset side. Cash 5,000. These are the account balances given in the problem. Okay. Now I'll go to the next slide for cash book. Cash book, debtors account, creditors account, etc. This is the cash book. Okay. In the cash book, first I'll take the opening balance. Two balance brought down from the opening statement of 5,000. Okay. Then I'll enter as per the available information. Available information is, first is cash sale 15,000. To cash sale 15,000. Then payment to creditors is there. Before that, I'll take the land and building. Otherwise, I'll forget it. Okay, therefore, I'll take the land and building, that increase of 2,000. Opening balance 10,000, closing balance 12,000. 2,000 increase is considered as purchase of land and building. First, I'll take it. Otherwise, I'll forget. So, I'll take 2,000 purchase. Then I'll take the creditors. Payment to creditors is 31,000. Then salary paid. Salary paid 9,000 I'll take. Drawing is there. Drawing rupees 7,000. Then firm's policy to regarding 25% profit on cost. Bad debt is there. Depreciation there. These are the PL account items. Cash book items completed. Now I'll go to debtors, creditors, and bills payable. First debtors account, second creditors account, bills receivable account is not there because bills receivable information is not given in the problem. Therefore, I will not prepare the bills receivable. And in this slide, I will prepare the bills payable account also. Three accounts simultaneously I prepare. You see here. First, you take the balances. Debtors account, creditors account, bills payable account. Three accounts. First, I will take the balances. Two balance brought down, debtors is 35,000. Next, buy balance carried down 34,000, debtors account. In the opening balance, they are there. Okay, opening and closing balances are given. From there, you take, serially you take. Then creditors account balance, two balance brought down 21,000. Buy balance carried down 19,000. Creditors account balance, opening, closing. Then bills payable, opening balance 8,600, closing balance 11,400. Okay, you record this. This is the balance. Balance item completed. Come to the next para, the following further information. In the following further information, first is bills payable issued. Okay, bills payable issued means it comes in the creditors account and bills payable account. You record. In the bills payable account, by creditor, bills payable issued 20,800. And same comes to creditor account, two bills payable 20,800. Okay. The next item, cash sales not comes, you take the cash paid to creditor. Cash paid to creditor in the creditor's account, to cash 31,000. Then salary, no problem. Then next is bills payable issue during the year is here. Payment creditors is completed. Salary drawing are there? No. All the items completed. Regarding this, all items completed. Okay, all the items completed. Now I will go to close this account. Close these accounts. Okay, everything is completed regarding first part. I close the bills payable account. Bills payable account total is 29,400. 29,400 is the total. Okay. Then what is the difference? The difference is 18,000. 18,000 difference. Important item is cash. I directly recorded. Okay. The difference 18,000 comes. Important items here is cash. Cash is 18,000. So you have to go to cash account to enter this. Okay, I'll go to cash account. In the cash account, credit side, buy bills payable 18,000. Okay, 18,000. Remember this. Clear? This is 18,000. Then again go to next bills payable account. Here comes, I entered there. Come to this next creditor account. Total, sorry, bad debt I recorded. Bad debt is there. I record the bad debt. Bad debt is rupees 800. You record bad debt. Then close the creditor account. Creditor account total 70,800. 70,800. Then difference is 49,200. 49,200 is the credit side. Therefore, you know it is credit purchase. Then come to the debtors account. In the debtors account, if you close the account, then there is a mistake. Because you see here, debit side required items are recorded or not. Credit side required items are recorded or not. You have to see that. If you are having thorough knowledge about this account, then you come to know it. Otherwise, it is not possible to close and correct, ascertain the correct answer. My dear friends, in the debit side, required items are opening balance is there, but second important item is the credit sale is not given in the problem. Credit sale is not given in the problem. Credit sale one item. And debit side important item is cash collected from the debtors is not given. Two items are not available. Two items are missing in this account. Whenever the two amounts are missing, it is not possible to prepare the account and close it. Okay, remember this. Two items are missing, then you don't close that account. Okay, so it is I'm helpless to ascertain two missing items at a time. Therefore, I leave this problem account here only and then go to next account, that is trading profit and loss account. I'll go to trading profit and loss account and see the situation. See the situation. Okay. This is trading profit and loss account. Debit side opening stock 28,000 I'll write. Second, to purchase. Credit purchase is only there. Okay. Credit purchase I'll write 49,800. 49,800 credit purchase I'll write. Then third item, wages is not there. Okay. Then next, buy sales, credit side. In the credit side, I'll write credit purchase I'll take from the debtors account. That is not ascertained. That is not ascertained. I'll write the heading only. I'll write the heading here. Then cash sale is given in the cash book. I'll take 15,000. Okay, underline this. This total comes to the total sales. Okay, it is an incomplete item. Leave it. No problem. Come to the next item. Closing stock. Closing stock is 25,000. Okay. Then gross profit. Gross profit is 25% on cost of goods sold. Okay, cost of goods sold you have to calculate. You see here, I'll calculate the cost of goods sold. Cost of goods sold is equal to opening stock plus purchase minus closing stock. Opening stock, remember this equation. Otherwise, you note down the equation. Opening stock plus purchase minus closing stock is equal to cost of goods sold. 52,800 is cost of goods sold. On this 25%, 25% is the gross profit. So gross profit is 13,200. Okay. 13,200 is the gross profit. You close it. 91,000 is the total. 91,000 is the total. Difference is 66,000. Okay, now you got the total sale. Remember here, you got the total sale. You got the total sale 66,000. So what is the credit sale? Out of total sale, you deduct the cash sale. Then amount is 51,000. This is the cash sale. Because of shortage of time, I am going fast. Okay, 51,000. Now you take this 51,000 to the debtors account. Okay, you take this 51,000 to a debtors account. In the debtors account, you record 51,000 cash credit sale. Credit sale is 51,000. Okay, now you got one item. Then automatically you get the another item. You close this account. You close this account, total 86,000. 86,000. Difference 51,200. This 51,200 is nothing but cash collected from debtors. Then go to cash book. Then go to cash book. In the cash book, debit side, you write debtors account. Cash book total is collected. Okay, now cash book total is collected. Now you close the account. Now you close the account. Okay. So cash book total is 71,200. 71,200. Balance is 4,200. Cash book completed. Okay. Next, you close the debtors account. Debtors account already closed. Now you close the statement of affairs. Statement of affairs total 78,000. Total 78,000. Capital is 46,200. Okay. This is the point you remember. How I made the movements. This is the very technical one. You have to follow the technique. So trading account. Then take the gross profit to the next stage. Then you take the salary. In the salary, you deduct the last year outstanding 2,200. Then add current year 2,600 outstanding. Salary is 9,400. 9,400 is the salary. Then bad debt 800. Depreciation on furniture, land and building. Depreciation on land and building 1,000 rupee. You take this 1,000 rupee on land and building. Then close the account, ascertain the net profit. Net profit is 2,000. Okay, net profit is 2,000. Clear? Then open the balance sheet. In the balance sheet, you take the capital. Capital is 46,200. Add net profit. Net profit 2,000. Total 48,200. Less drawing from cash book 7,000. Balance is 41,200. Okay. Next is creditor. Creditor closing balance 19,000. Bills payable closing balance 11,400. Outstanding salary you take from the balance 2,600. Liability side completed. Come to the asset side. Cash account 4,200 from the cash book closing balance. Debtors stay 34,000. Debtors account closing balance. Stock closing balance 25,000. Land and building 10,000 you take inner column. Add addition 2,000. Less depreciation 1,000. Less depreciation 1,000. Balance 11,000. Balance 11,000. Okay, total is 74,200. 74,200. Because of this time limit, I move very fast. And so once again, you repeatedly go through the video. Go through the video and clear your doubts. Okay. This is the problem. In this problem, I made movement from the trading account. Trading account to I have certainly total sale to cash, credit sale to then debtors account to cash collected from debtors, then cash flow. These are the movements I made. So you have to make perfect regarding these aspects. Okay, you go through the video once again repeatedly, you will become perfect. Okay, thank you. It is enough for today. Tomorrow I'll take one more examples. And another 4 examples I will solve on this chapter. Remember this. Only 4 examples and remaining examples you have to solve.